Now, the reason I got in right now is because, I'll show it to you guys. So we're in a really market, and if I mark up the lower structure pivots you have right here, let me change this to yellow actually so you can see it better. So you have one right here, you have one right here, here, down here, down here. Okay, those are lower structure pivots. It just means that inside this really choppy, rangy market, these are your pivots that would be considered the discounted zone. Coming off of this high here, this was the lowest one before price came up and came up a little bit higher above this level here. So what I'm trading is because we broke out higher than this range over here to the left, that price does not come back down to the same level down here. And it might, because this range is really strong, but I'm hoping that it finds support slightly higher at a higher level, closer to these other pivots like that are slightly higher right here. There's like a secondary layer of pivots that I'm going for. Now, just so you guys know, if I lose this trade that I'm currently in on gold, if this comes down, I will be re-entering once there's a change in state of delivery on the 5 at a lower level. So that means that if this one loses, I'll look for another change in state. Like let's say it does that, then right here I would get back in to still go for that upward movement. Okay, so I'm currently looking for longs on gold no matter what. I'm in a long, and I'm currently looking for longs throughout the day, and that's just to match the current range that we're seeing, where down, up, up. You know, this is like massive consolidation, and gold is a permanently bullish asset. It'll always go up. So it's currently dipping back down though to the support that I was trading off of, and on the liquidity targets, we're looking for longs because the last closed candle, right, which is important, the last closed candle was a bullish candle coming off of that custom line right there. So that is what's going on in the land of gold. I'm going to stop the screen share and I'll bring on our guru who leads us through awesome trades on the NASDAQ. This has been a really exciting week so far, 2 trades in 2 days. I'll pass the call over to you, Ryan. Good morning and happy trading to everybody.
Good morning, guys. So today, I'm not necessarily going to be looking for an execution. It is pre-FOMC, and you can kind of see that based on the structure we have on the high time frame. I think this would be a good time to cover some new, not necessarily new concepts, but something that hasn't necessarily been shown on the AM session calls, being the inversion gaps and soft stops. Okay. And also you can look back at yesterday's trade. It would have taken forever, but the narrative yesterday was very, very clean for longs, the ones that hit like that TP1 slash break even level. So let's go through that, and we'll cover some draw and liquidity stuff. We can still make this time be useful, but yeah, figure out how to. I don't know why screen sharing on a MacBook is annoying sometimes. Just share my screen. Okay. So obviously looking at today's range, we have not gone anywhere for the past 1, 2, 3, 4 hours. We do have nice rejection from this bearish gap, so I honestly could see us going down to the PM low. I don't like that as a target because we have really weird like divergence and like these lows now, so we're really uncorrelated, which also isn't ideal on one side, and we're not necessarily respecting it to the upside. So I'm just gonna let this sit pre-FOMC2, but let's discuss we'll use yesterday's trade as an example. What an inversion gap is. Okay, it's a pretty intuitive concept. It's pretty straightforward. It's in the name, is that you look for a fair value gap and you simply wait for that gap to be disrespected. And that's how we choose our entry confirmation as compared to the changing state of delivery. So also, you guys can ask questions and follow along with me. If I don't answer immediately, it's because I'm not on that screen. Sorry, I have to flip back between tabs. Okay. But what is the difference between a change in state and an inversion gap? And what do they serve as? Well, first of all, they both serve the same purpose within the system as a low time frame confirmation. Everything in this process still remains the exact same, right? Key level SMT, draw on liquidity. Our second step, being a change in state of delivery, or now us introducing an inversion fair value gap, is to confirm on the low time frame that we're shifting structure and displacing and aligning with what we want our time frame bias to be. Right. So in this case, yesterday, the narrative was literally textbook. Like I was surprised we didn't distribute quicker and have a really good day yesterday. We came down, we swept out previous day low, and we took out every level of relevant sell side liquidity within the past 24 to 48 hours, that swing low. And then what do we have to the upside? Session left stack session highs, being Asia and London session high that we didn't take out, right? Very, very easy narrative wise that we have no place to go lower, or I wouldn't like us to go lower based on that, and we have levels to go higher or draws on liquidity. Well, that's our high time frame bias. It's as easy as that, is that we want to be long to those levels. We have a protected low where we want to, we don't want price to go towards. What's the confirmation? Because we can't just see that get swept out on the high time frame and just enter there, right? Because in that case, like, I don't know, maybe we would have entered here and gotten stopped out. We could have entered at this low. You need a low time frame confirmation. So, inversion fair value gap. What is it? Well, we use the same concept of a fair value gap here. And it's in the name, right? Inversion fair value gap is that value gaps are areas where you expect the market to rebalance to and seek or to act as levels of support or resistance, depending on which way you're trading. In this case, it would be, or I guess it's just support. We would expect price to retrace and continue lower if we were to follow a bearish narrative. With us tapping into this key level, well, we want to see a shift higher. We've taken out liquidity to the downside and we have resting targets higher. What do we see happen here? We see strong volume displacing to the upside. Okay. V-shape displacement, right? Within 3 minutes, we're strongly shifting through this level that would otherwise be used as a level of support, hence the inversion. Right? We're not using this as a level of support to the downside, and we're inverting it, hence us being able to use that as a confirmation to the upside to align that with our targets on the high time frame and a confirmation from our key level, right? So why am I choosing to approach this for 9:30? I still use CISTs pre-market. I still use CISTs pretty much any other time. But what you notice with 9:30 open is that that's where the most volume is injected into the market throughout the entire day. Right. So looking back, as long as there's not pre-market news, you trade, AM pre-market and your ranges are 70 points, right? Well, now price opens up 9:30 and within 5 minutes we have a 70-point range. That can be really, really tricky when we're looking at CISTs. And what you guys have seen is that we get really big stop losses. Now, there's nothing wrong, first of all, with trading one-to-ones. As you guys know, what I do is we trade these one-to-ones at a very high win rate, and I just size up my risk, right? So I think somebody asked a question like, what's my risk depending on my account, drawdown, and my balance? On my top steps for these one-to-ones, I literally size up like crazy, like $650 per trade, $700 per trade, right? So then a one-to-one goes a lot longer or goes a lot further because I can trade those confidently at a high win rate, right? What we're doing with these inversion gaps is that I'm sizing down. For me, and hopefully it should kind of be similar for you guys, but the results shouldn't change. We can adjust risk or I'll be adjusting my risk. I want to trade higher risk to reward because it's a little bit easier to manage positions in terms of like copy trading from signals from this live. Um, could be a little bit more flexible, but price will move quicker. So we got to try and enter as soon as possible and calculate risk and all that stuff. Okay? But it allows us to get into the move much sooner. Now, the CISD is always going to be a much higher quality confirmation, but what we see is an opportunity to enter much sooner, right? So in yesterday's trade, quite literally where we would have, where the TP1 / break even level was, is like not even a relevant level if we were to enter on the CISD, right? Our full TP would have been a 1.33 versus a 2.78. Right? So these trades are not going to be hitting at the same rate, which obviously these CISDs are, which is I wouldn't say superior, but I like that as a shift in structure, as a confirmation on a low time frame compared to the inversion gap a little bit more. But we're getting higher risk to reward and we're able to milk a lot more internal levels out of your inversion gaps. Okay. So I hope that makes sense. It's a pretty intuitive concept if you're familiar with fair value gaps. But yeah, yesterday's trade actually would have played out, but oh my gosh, would it have taken forever? Like this was terrible distribution. Like even in hindsight, I wouldn't have rode up to full take profit. This was disgusting. So it probably wasn't anything to trade within that range either yesterday, but it was a good example to showcase the inversion gap, right? Making sense, making sense. Now, what is a soft stop? Soft stops are where we wait for candle closures. So when I say candle closures, by now you guys should understand, like for CISD, we wait for the 1 minute candle to close. So at the end of this, when it shifts above and it closes the bullish above the CISD you enter, same thing for the bearish candle or for the inversion gap. You have to wait for the candle to close above the level. With a soft stop, you're waiting for candle closures instead of just if the level gets hit. Right? So on Monday, we used a soft stop where actually the high was swept out where our initial SL was, but we waited for, since we were anticipating an SMT, we were waiting to see how we react from that level. So let's go and look back at that. Let's explain soft stop. And again, you have to manage your risk around these soft stops. And you have to manage your risk around your style of trading. These two things have to go hand in hand. I'm not going to be risking $600 on a soft stop because as you're about to see, soft stops can vary a lot, to be honest, with how much you're risking. Okay. So let's go back and let's look at this beautiful trade from Monday. Right? Same deal here, 2.5 risk. A lot higher than what we're used to seeing for AM. Same thing. Displacement, perfect, right? So Monday, let's take a look back here. Is what we saw is that our stop was from this high. For being a soft stop, and the reason I anticipated this as a soft stop is because this is a little bit more advanced, but I could anticipate that there could potentially be an SMT at this high, and I wanted to see how we reacted to it just because of how far away we were from that level on ES versus us being much closer to it on NQ. So you can pretty much just anticipate the SMT there. So instead of us closing at this high, we wait for the candle reaction to an SMT. Now, to be honest, most times at these highs, it's just going to be a hard stop because oftentimes, obviously, ES is going to be closely following NQ. In this case, we were just able to anticipate it because they were so obviously uncorrelated at that high. So you simply wait for the reaction. And if we were to displace above this level, we would close. Now, like I said, and before we entered the trade, I was like, I'm sizing down, A, because we're taking higher risk to rewards, executions, and the win rate is going to differ a little bit. And B, because what happened with soft stops is, I don't know, yesterday that candle could have closed 10 points above that level, right? It could have closed right at that level. It could have been perfect, but you have to have wiggle room, right? So you do have to size down your positions, which evens out again because we're trading higher risk to reward. But you have to be cautious of that, right? These soft stops, it doesn't happen very frequently. But what happens when we absolutely rip through that level? right? You have to be comfortable with that and have a comfortable sizing to be able to avoid that. So as always, like before the call out, I'll say you have to be comfortable, size down, risk accordingly. But yeah, those are kind of new things that have been introduced that you've seen. Obviously, it's pretty intuitive and it is a concept for, some of the three-step model students that you might be familiar with. It's something that's in the entry model section over here. But again, it shouldn't really differ. It's still, you know, pretty, I always say where I enter, where the stops are. The soft stop is a little bit trickier, but I'll always say when I'm gonna, close out, when I'm gonna wait for the reaction from the sweep, stuff like that, right? So, yeah, price action is pretty wonky right now. Continue to resweep these lows, and we'd have SMT pretty much at all of these resweeps. I'm not really a fan of trading this pre-FOMC as well. I believe there's all right. Hello, hello. All right, we're back. Sorry about that. Perfect. All right, but yeah, that's what we're going to be looking at for these AM session calls. The inversion gap could enter up or could offer up more entry positions, but again, like it's not necessarily going to change overall P&L. It's just a different approach that I think will translate a little bit better for signals for you guys. But yeah, I'm expecting the same exact results. Going to be very green as usual, but yeah, that's the approach we're going to be taking. Sound good to everybody? We understand some of those concepts a little bit, introducing that stuff. But again, like this is kind of just an approach for 9:30 throughout the day. I don't really like trading inversion gaps, but same exact deal, right? Same exact process, same exact reasoning, and why we're doing what we're doing. Any questions regarding that? I'm good. All right. And also, hopefully, internet will be arriving, or I'll get updates on my internet today or tomorrow so I can update the recordings for the trade recaps and start doing daily recaps again. What we got for the time being. No executions today, but Thursday, Friday will be great. And that's kind of what I got for you guys today. Yeah, if there's any questions, let me know and we can cover that right now, even if it's over previous trades. I want to make this all beneficial for you guys, but it's what I had in mind to cover today. So yeah, Joy, for soft stop, you size down because you can anticipate it fluctuating a little bit more. You don't want to, you want to de-risk because there is a chance that it could displace a lot. So you have to be comfortable with that size. How much do you size down your normal risk? Like 3/4. No, we don't. I'm not trading pre-FOMC today. I don't like the divergence. So typically, if I want to risk like $500, I'll risk like 350. You know, give that stop a little bit of room. And it evens out. You know, not every time is the soft stop going to close really really poorly. Sometimes you'll get normal closers where it's a normal risk and you lose like 350. But other times, again, you have to be aware that displacement could close, or yeah, it could close really roughly and you could lose a lot. So it's like a psychological level more than a hard stop. Same idea. Level of invalidation. Yeah, that's what we got. And I mean, yeah, while we have time, we could talk a little bit more, just some mentality stuff. I can never just stress systemacy enough for you guys, and being process driven in comparison to acting emotionally. I always want there to be reasoning for an action that I take on the charts, right? Whether it's, I don't want it to be P&L based. I don't want it to just be an intuition based feeling. There are some discretionary things that you guys know of, like a bad CISD versus a good CISD. But you guys hear me say on the call every single day, the best we can get, or the best we can do, is that we follow that process to a T every single day. That's all we can ask for. Right? Yesterday we got broke even, and then we watched price run. All we can ask for is the fact that we followed the break even rules correctly, and that we entered the entry model correctly, and it met all of the criteria to a T. That is all I'm looking for every single day. And say, on a day like yesterday where we get a really rough break even, maybe in my mind, I'm like, oh, geez, I really sucked a lot. Now for the next trade, I'm not going to go break even because of what happened on this trade yesterday. Each trading day and each execution is an independent event, right? One does not have any effect on the other. It's all process driven, right? And again, this is the system in place to work over time. It's not about one trade. It's not about trades throughout 1 week. It's about all the time. Lost me? Oh, my mic was working. Flashing green. Do you tighten up your stop loss after retracement rejects a fair value gap? Like, you mean if we support it? So, like, if we come down, like yesterday, kind of what we did, where it comes down and respects the fair value gap, and then we went break even from there. Is that what you're talking about? Except in this case, it'd be like if it do lower. Not necessarily. Just in this case, it's depends where it profit and the delivery was bad. It's kind of a situation where it's like this delivery is terrible and there's not a lot of volume. So you could go break even in that case. But other than that, not necessarily. You kind of just play from the support. But sometimes I don't really like to losses too much. It's in drawdowns. Sometimes I do, but I like just letting the levels play out. Except a lot of the times, you guys know, we go break even really quickly. I don't like when my trades enter and go right into drawdown. Those usually don't end up too well. When we're in drawdown, I usually let it take its course, right? Whatever happens with the levels of support we have in drawdown happens. There are some situations, yeah. Projecting a little bit, but still just wonky. Yeah, that's what I have for you guys. Some words of wisdom, how I approach the markets every single day. Again, it's easier said than done. And I know like a lot of stuff regarding trusting the process and having that ability it just does take time. Okay? But I always want to enforce it and that message to you guys every single day whenever I can, because I quite literally can't stress enough the importance of it, right? Like, I don't think some of my older students are on the call today because I think they know I'm not trading, but I was talking to some older students about that. It made me think, like, good thing to talk about today. So something cool that I noticed is I think at this point in time, all of the students from my old program that transferred over into this program, everyone is trading funded capital right now, I believe, unless some people lost some accounts and I don't know. Every single student from my old program is currently trading on funded accounts, like for payouts and receiving payouts, which is really cool. But yeah, just trust long-term process, follow systemacy, and yeah, hammer it. Trust the process. And I mean, yeah, like Sal and I have been talking about at this point in time. What is it? How long have we been into the program? It's December now. It was started back in like late August, early September, maybe. Um, I mean, there's been enough data at this point regarding win rate, risk, reward, return that the numbers are there. Yeah, Joy. I mean, some of that stuff is a little bit discretionary, like it's covered throughout the daily recaps. Like there's not it gets a little bit trickier with position management because there's not exact hard rules for it. Like as objective as a lot of other stuff. Like today or yesterday, like I said, like is based on what I saw with price action, with price chopping and not displacing. So that takes a little bit more experience, I guess, and understanding like what bad price actions doesn't look like. It's a little bit harder to differentiate and put objective rules on it. But it's also like at the same time it should be relatively straightforward, right? Like yesterday, we enter and price move sideways for 15 minutes and we're putting in SMTs on both sides of price, then you can go break even from there, right? Like it's not really rocket science that this isn't good price action that I want to be in. Yeah, I'd say risk management is definitely a harder part of trading because it is a little bit experience based, especially with a model that's as objective as mine. But a lot of what we covered is again, we go break even when we have opposing key level SMTs like yesterday. We go break even when there's opposing rejection from liquidity. Just follow that, right? And like I said, as compared to like when you're in drawdown and it just hits your stop, it hit your stop. You just go to the next trade, right? Yeah, coming up on 10 here again. It is FOMC, so sorry, I'm not really looking to take any executions, except to be honest, this price action doesn't look like the worst. Pretty decent. I just don't like the high time frame. Kind of the opposite from yesterday, where the low time frame looks good and the high time frame is not ideal. Sergio is typing something here. Where would I enter today if there was an FOMC? Probably nowhere. I mean, that's probably why I wouldn't be trading it, because I don't see anything I like, regardless of if it's FOMC. What you're seeing here is that, like I was saying earlier, you have really weird divergence at a lot of the key levels to the downside. So what's happening is, like, we've had this SMT this swing low for like hours now, right? Like, since this low has been taken out, we've had SMT all the way through here, like these lows. And it just hasn't been holding, right? So you resweep, you get a key level SMT, doesn't hold. We're in a choppy range on the high time frame. Can't hear anything. So yeah, I mean, that's the reason I don't trade FOMC anyways, is because it's one of those things. It's like, I don't bother even really looking at days like this, because I know that price tends to look like this on FOMC. Yeah. And guys, one of the reason I was talking about risk and stuff is because you want to give yourselves guarantees. One of the guarantees this week is because of the execution on Monday, right? Unfortunately, I know a lot of you guys got stopped out, and kind of depends on fills and everything. Whatever happens, happens. But for my execution, and for those of you that did win the 2.5 to 1 risk reward trade on Monday, if you can follow a risk plan, you can give yourself a guarantee, meaning that I've guaranteed, if I follow my rules, being 1 win or 1 loss per day at a maximum of a 1 risk to reward, or my equivalent dollar amount of a 1 risk to reward for what I'm going to be trading, I will be up on the week. I think I've said this, like, I don't know how many different times now. Give yourself guarantees in trading. Have a rule in place with your risk management that allows you to have some form of guarantee that you're going to have a safety net for an account. Guarantee that you can see the next day. Guarantee that you can see the next week, right? If you're trading and you don't have that set, or you don't have a rule set, a max loss limit, the floor is available to get hit. With trading, there's no ceiling, and you can continue to chase and chase and chase. But if you lose money on, however much money on a funded account on your portfolio, that's gone. It's done. That's something that manage that, right? My risk to reward, or my rules, 1 win, 1 loss per day. Easy as that. And my loss is equivalent to, depending on my portfolio size and how I'm going to trade, like right now it's $350. It's as easy as that, right? In an environment that's as crazy as trading, giving yourself an objective guarantee is incredible. It's not something you get a lot, right? You can give yourself that. And it's tough, because a lot of the times in your guys' head, you'll say, I do have that, Ryan. I say, I do have my 1 maximum loss per day. But then we sit on the charts after we lose. We say we chase, right? So one thing I suggest for everybody is to set, if you're on Top Step, or I think Top Step, I don't know what other firms have it, quite literally go into your settings and set a maximum daily loss limit, meaning that your account will be disabled until the next trading day if you hit a certain dollar amount. Go and do it right now. I'm not even joking. Right now, if you don't have one, go and set one. Give yourself that guarantee. What about afternoon session? FOMC releases PM session. You get smacked by the FOMC conference during the afternoon session. Yeah, and that max loss limit, like, I've talked to several students about it. They build up massive portfolios, or they over leveraged, and they've won 4 days in a row on an XFA, and they need one more winning day on an XFA to secure a massive payout. But again, they don't have a floor. So 4 perfect days of trading versus 1 loss, you've negated 4 days of perfect trading, and you blow your account on the final day because you don't have that floor set, bang, your portfolio is gone. That $6,000 you made on the XFA, that $6,000 balance you have, gone because you have no anything. You have no way to manage that. It could just be gone in an instant. Give yourself the guarantee. Literally the easiest thing you can do in trading. Like the number one, I'm not even joking. That's literally the number one hindrance to why people aren't good at trading. Is because you can be a perfect trader for 99% of the time. All it takes is 1% to quite literally lose all of that 99% of progress. Why it's so hard. You have to be 100% perfect. Not an easy thing to do, right? Manage that, right? Like I think we always look back at like months of when it's like this week, right? 2.5R, we're going to be in profit if we literally just follow the rules for the risk management. That's all it takes. How do you do that? Do you have are you on Top Step, Bobby? You can go to there's a little gear setting on the right hand side of your tab, and you can click like manage risk settings and enable the just change your max daily loss limit. There's also like a manual um thing, but again, the manual thing is kind of dumb. Like if you don't want to press it, you don't want to press it in the moment. Yeah. I'll wait for Peter to type out what he wants to type out. Done it many times. One day you can undo all the hard work of weeks or days. It's a great setting that has saved me feet. Absolutely. So for those of you guys that trade prop firms, go turn it on right now. I'm not even joking. For personal accounts, I don't know if you can do that, like brokerage wise, or if there's a max loss limit. I don't think you can do that. A little bit tougher, but I don't know. I've also said, like, what can we do to separate ourselves from the charts? Disconnecting on the day or disconnecting from a session is super important. MT5, I don't know. I haven't used MT5 in so long. I haven't used actually back when I used it, it was I think it was MT4. I don't actually know if Apex has it. You can plug in so many EAs. Yeah. Sorry, I'm not of much help for like those the Forex brokerage and EAs and stuff. All right. So I'm going to wrap up the call a little bit early. One more thing I want to say is that I'm very proud of everyone here. I know I don't personally work one-on-one with everyone in this call. I'm only a handful of you here, but very happy with the commitment that I see the same faces to show up for these calls every single day, continue to put the work in. And one final message is that comparison is the thief of joy. Okay. I was talking to one of my older students from my old program, and he always feels like he is behind or he's always looking at someone else's results in comparison to him. If you guys want to compare, you guys can compare to me. All right. I know I work with a lot of newer students in this server, or like people with literally zero experience trading. Um, I didn't magically spawn as this perfect trader and as a perfect being to lead a program and to execute the way I do and to be able to follow everything to a T. I've been trading for over 4 years. Okay? My first year and a half of trading. Some of you guys are 4 months into trading as a whole, like literally learning what candlesticks are, and you're beating yourselves up. And yes, there have been great results within the 4 months period. And yes, that is irrelevant to your journey, right? It's good because it shows that it's possible and it's 100% achievable, but it means nothing in the scope of your world. But compare yourselves to me. At a year, I can go back and find screenshots. I might do that. I might show a little funny screenshot. Back when I was trading in high school, I was on my school MacBook and I was trading like Bitcoin derivative like swaps or something on Bybit, and I was using like 50x max leverage on a couple $100 portfolio trading like VWAP crossover, whatever. I don't even know what I was doing, right? And that was the first 6 months of my trading, is blowing portfolios and wasting time for 6 months. And a lot of you guys are beating yourselves up because at 4 months you're only funded. You're not and you're not getting payouts, right? You've only been funded within 4 months of trading. And by the way, look at the statistics for prop firm funding. Look at how many people are funded traders. Look at the percentage on that. That'll make you feel good comparatively. But like I said, comparisons are irrelevant. But what's gonna make you great? And I think someone in the chat said this yesterday, or I saw like a TikTok. It might have been Vanessa's TikTok, but it was like, being a bad trader isn't losing. You're a bad trader if you don't learn from your losses. That is like 100% true. And you be a good loser, right? How do you bounce back from a loss? Are you gonna like give up? You gonna beat yourself up? You gonna say, "Oh, other people are so much better"? Da, da, da? No. Okay. One of the beautiful things about trading, it's literally just you and yourself. Not fun, but nobody else's actions dictate your own outcome. It's pretty sweet when it works out, right? Just want a little message for you guys that this is, what you see is quite literally years of work, and there's no reason to beat yourself up or feel like you're not good enough. I'm very proud of everyone's progress and seeing the work everyone's put in. So just know that, right? So if there's no more questions, we're gonna wrap up the call here. Or I think you guys can access the chat for the daily live stream, even if it's not um going. So you guys can still see the old chats if you want to figure out the what's it called, the MetaTrader names you're talking about and stuff. But yeah, that's what we got for today. I'm excited for, obviously, we have 2 more days left in the trading week, Thursday, Friday. Like I said earlier, we have the opportunity to wrap up green regardless of what happened. We can stink it up for the next 2 days and end up green just by following the rules, right? So we'll be back at it tomorrow, 9:30, Thursday, Friday. Got no news, and we'll see where the rest of the week takes us. Thank you all so much, and I'm excited to see y'all tomorrow. Take care, everyone.